Hey guys, I hope you're all doing well. Today I'm going to do a quick video going through ADP's business. This is a business that I actually don't know too well. I'm not too familiar with, so we'll kind of learn some stuff together here. But a viewer on a prior video, I believe it was a breakdown of Visa, asked if I take a couple minutes to go through it in a video, and I finally got to that video in my queue. So this is me kind of responding to that comment, looking into this business. It's a good opportunity for me as well to learn a bit more about a new stock. But if you like this type of content, please subscribe to the channel. If you have any stocks that you want me to look into a bit more, let me know in the comments below. Would be happy to add it to the list of stocks I'm going to look into and videos I'm going to make. And yeah, let me know if you guys are invested or know more about this stock, given I'm pretty new to the business and the stock. But throughout this video, I'll kind of just go through a bit of an overview of their products and their strategy, and then go into their I believe Q2 2023 earnings that they released a couple weeks ago, and then talk about the valuation a bit and just my overall thoughts from 1,000 miles away. So I'm going to start off with this investor presentation that they actually look like they did this month, so it's pretty fresh. Overall summary of the business is they're a human resources company, both doing software, providing software to businesses of all sizes, as well as human resources solutions that we'll get into a bit throughout the video. Their big market, if you look, they deliver payroll to over 40 million workers globally. 25 million of those are in the US. So 1 in 6 US workers are using or getting their pay given to them through ADP's software, which is obviously notable, big company. You look at the areas they're looking at driving growth, different cloud-based solutions, scaling HR outsourcing, which is an area it looks like they've been growing fast, and then leveraging their global presence, maybe to cross-sell new products across companies that they have partnerships with internationally, but they don't have products yet in those international markets, just in the US, in order to expand share in those markets. Overall, revenue for last year, about $16 billion. Looks like their margins are about 25% EBITDA margins or EBIT margins. So pretty normal, not anything crazy there. But good to know that they're definitely profitable, have a really good rating, and have increased the dividend for 48 years. So definitely on the cusp of being a dividend king in their own right. Yeah, we can glance through some of the stuff. Obviously, very large market when you're talking about human resources and human resource software, just given every business has a need for this product. And it's a market that will probably grow with the economy over time. So it's a good place to play long term. Okay, couple things that they're just calling out here in terms of their products. They have products across the realm of HR. So how people can work better, how we pay employees, having an employee-centric side to the software, and then just visibility and being able to use the platform for many different things. So this article here, I think, really highlights some of their products really well. You can kind of see Run is the name of one of their products, which is a cloud-based payroll and HR platform. Just to not read through an entire article, you can kind of just get a sense of the kind of products and how they have a strong user experience for HR professionals to utilize the products and the subscriptions. So you can kind of read for yourself, but you can look at investment activities, other products that they sell. You can look at recruiting, filtering on applicant screening. So they really have different products that address all the needs across HR. This is tracking absences, cost of labor, things like that. So people can be really diligent with how they manage their business, how they manage their human resources. If they need more, if they need less. This is how you manage benefits, if medical, dental, etc. So on and so forth. So they have tons of products in this space, really covering the entire breadth of the field. And then in addition to that, they have products that help with decision making. We looked at some of those right there, and then services as well. Looking at their mix. This is their mix from 2021, so $15 billion. Nice to see that they're pretty well diversified across national accounts, small businesses, different types of services. PEOs, I believe, where they take HR like outsourcing into their company. So that's kind of like for maybe smaller companies that don't want to do their HR at all. And that's been an increasingly large part of the business. I assume it's less profitable just because it's less scalable and it's maybe less software-y in types of the economics, but just worth noting they have about a third of their revenue coming from that. New user experience. So I think this is just showing that they continue to roll out new products both at home and internationally, and a summary of lots of the products that we just looked on in that last article. Okay, so this is one thing that's interesting. Obviously, you saw almost half their business was out of the U.S. in terms of the consumers that they serve, but they do have sales coverage in over 140 countries. So they have a big opportunity as the world kind of evolves, becomes more cloud-based, more technologically savvy, to be at the forefront and a really strong option for lots of customers in this space and lots of companies looking to be more efficient with how they manage their human capital and human resources. They have and now I'm just going off the cuff here, but 7,500 sellers and all virtually enabled. So maybe this is like them outsourcing sales. They're widening their scope of like where they sell in the world by licensing out to third parties potentially. Not sure, and I'm not exactly sure what logos are pertaining to, exactly what that means, if those are like memberships or whatever that may be. So someone who may know more about the company, feel free to educate me in the description. As part of the service side, they are becoming a lot more, I think this just enables companies to become a lot more digital and a lot more intelligent with how they manage their systems. They're just kind of going through some of that here. And then in terms of the foundations of the business, I want to spend a couple minutes on this slide here. You can kind of see their clients achieve better efficiency, so 25% more revenue per full-time employee. Some of these acronyms I'm not familiar with, but at the bottom here, 50 basis points of annual margin expansion that they think that they're going to experience as they scale the business, which is pretty typical software. Scaling up, you should be able to take out more gross margin as it scales efficiently. 8 years of consecutive top product award for HR technology, so all good things. In terms of how they manage their capital, number one, this is typically how really strong companies who have 50 years of consistent dividend growth manage their capital, manage their business. Number one should always be organic reinvestment. So assuming you have high return on investment opportunities within your business, funding those first, making sure the strength of the business remains strong and you're positioning the business for further growth. Some businesses need more CapEx and organic investment than others. I'm looking here, they invested 1.2 billion and they had 4 billion of EBIT. So a pretty healthy amount reinvested in, not anything crazy, but also not anything super lean like Visa. Second one, M&A. Typically, if there's like good tuck-ins or things that you can leverage the broader platform for, makes sense to consider M&A opportunities. But then it looks like they primarily, in terms of after organic reinvestment, are returning a lot of money to shareholders. The dividend payout over 50%, almost 50 years of consecutive dividend growth, about 1% average buyback on shares. So I love to see those things in terms of prioritizing the shareholders and the investor. This is just looking high level. So let's look at their software business, which I believe is in blue here. So they grew from 17 to 18, 6-7%, then about 5%. Then between 19 and 20 looks like only about 2%. 20 to 21 was about flat. And then 21 to 22, they had a pretty good like 7.5% jump. On the PEO, which I believe, correct me if I'm wrong for anyone who knows more, but is them completely outsourcing HR and doing it in ADP instead of the companies having to have an HR department themselves. This has really been where they've been growing their business. So from 3.5, over 10% growth, 10% growth, almost 10% growth again. And then this last year, that's over 10%. So they've probably been growing at a 10% average growth rate over the last 5 years, which is definitely outpacing their software business. I don't love to see that. It looks like it's somewhere they're focusing, but I think you can just get a lot more scale out of software from what I know about the business, which isn't much. So just speaking generalities here. But at least it's a new business segment. It's still growth, just probably a margin hurt on the whole business. And then long term, so looking to grow top line 7 to 8%, EPS as they buy back shares and drive scale in the low double digits. So a bit of a help from scale, cost savings initiatives probably, and then just the share buybacks. Yeah, they call it out there, 1% annual reduction in share count. But yeah, they're pretty much anticipating, let's call it to be safe, about 10% EPS growth over the medium term year over year. Okay, going into one other thing, I just wanted to show the visual for rather. Their commitment to returning capital to shareholders. So you kind of see here, buying back shares net every year over the last 12 years, which is really strong. Love to see it. And then the amount of money going to dividends going up over time as they're increasing their dividend much faster than they are buying back shares. So the absolute payouts going up, and shareholders are getting a bigger slice of that payout too as they lower the share count. 24 billion return since 2010, and I believe right now it's about a $90 billion company. So that's not a bad number. It's also not a crazy return number in terms of how much they've given the shareholders, but they've really focused primarily on reinvesting in the business, so the shareholders will continue to see growth down the line. And then we've talked about the consecutive dividend payout prior. Going into their last quarter results, it looked like, so they had margin increase of 120 basis point, EPS growth of 19%, revenue increase of 9%. So it looks like they perform really well in terms, and that's just kind of highlighted here as well. Let me get down here. This is interesting here as they break down margins on different sides of their business. So you can kind of see the software margins here, 32%, 8% growth on absolute revenue. And then on the PEO side, which is the outsourcing of HR systems, yeah, they outpace that growth since it's a smaller business. And yeah, as I suspected, the margins are about half the size. So while they continue to grow PEO larger, or at a faster rate rather, it's going to be a big margin hurt on the overall business, as it's probably a bit more labor intensive and less software-y in nature. And they really break it out here. So they're expecting, yeah, high single-digit growth on employer services, low double-digit growth on PEO. So not crazy growth rates, and definitely skewing to the business that I would be less excited about. But I like that they at least break this out for us. Okay, just looking here on that 48 year of systemic dividend growth, I think it's 49 years now. You can kind of see how that plays out. So it was just a couple pennies, and now they're paying out over 50 cents a quarter in dividend. So over $2 a share you're getting now. This is just a great chart and shows how this is a business that is compounding their dividend over time. I've talked about these types of dividend aristocrats and dividend kings before, so I won't go into it too much. But if you're looking for a long-term investment and building yield on cost over time, I think this is a company that's proved that out based off of what I can see. And now finally going into the stock, how the stock's been doing, what their multiple is. So this is a expensive company. They did $4 billion in EBIT. Looks like they're doing about 2.5 to maybe a bit over 3 billion in net income. And they're trading for between 90 and 100 billion dollars. So you're paying 30 times earnings for this company, which is pretty rich. Over the last year, they've performed really well. So up 10% in a market that's obviously been down over the last year. And then when you look longer term, over the last 5 years, 20% a year average, the stock's doubled. And then, yeah, they just have one of these crazy charts when you look over time. But even if we just look at 2003, so we do a 20-year, they're up 500 to 600%. So they've grown their stock 25 to 30% on an average rate annually over the last 20 years. So this business has been a phenomenal long-time compounder as they expand on where they play globally, but then also the products that they have. So congratulations to anyone who's been a long-term shareholder, even just the past 5 years of automatic data processing. My thoughts on the company at these prices are it's a bit too rich for me, given the type of company it is. I know Visa was a kind of comparable that this was mentioned on. When I look at Visa, it's only a handful of card systems with the networks of Visa, but I feel like in HR systems, HR management, there's a lot more local competitors. There's a lot more, it's a lot less of a moat, for lack of a better term, in getting in that space. People compete on price a lot more, I feel, as lots of companies, especially small businesses, are just going for the most affordable option. So I'm sure they obviously have a value proposition. They've done a great job of selling it, scaling it. But even from a margin standpoint versus a company like Visa, much lower margins, which may talk to their pricing power relative to a company in an industry like Visa. And they're trading at even a higher PE, I believe, than Visa slightly. So if I was to compare the two, I feel a lot safer holding a stock like Visa. I think there's much less downside and just a much safer business model. That's, I don't want to call it guaranteed, but just a much wider moat. But I'm paying the same, if not a higher multiple here for a company that I feel like probably has more competition and competitors both globally and locally around the world. But not to say this isn't a great business, just not a buyer personally here at 30 times. I think if anyone is holding this business long term, they've shown they're able to compound shareholder value for you. So you should probably be fine and probably do well on the yield on cost over time, but not one that I'm looking to add to my portfolio or anything at this time. If you like videos like this, please consider subscribing to the channel. If there's any stocks that you're interested in me taking a closer look at, let me know in the comments. Would be happy to add it to my list. Love engaging with you guys and talking to you guys about stocks, even ones that I may not know or own myself. And yeah, I'll see you guys all in the next one.